Team Bhartiya. Thank you, and over to you, sir.
Thank you. Good morning, and apologies for the delay. On behalf of DAM Capital, I welcome all to Prince Pipes and Fittings Q4 earnings call. From the team, we have Mr. Parag Chheda, Joint Managing Director, Mr. Niyar Chheda, VP Strategy, Mr. Anand Gupta, CFO, and Mr. Karl Kola, Head Investor Relations. I'll hand it over now to Mr. Parag Chheda for his opening comments. Thanks.
Yeah, thank you, Asim. I thank you all for joining us for the Q4 and FY24 earnings call. The presentation and the press release have been issued to the stock exchanges and uploaded on our website. I trust you've had the time to go through the same. I will initiate the call with a brief overview for Q4. We have delivered an improved overall performance after successfully navigating the adverse impact on sales and volume caused by ERP implementation earlier this year. I'm glad to share that our efforts of rationalization in realizations, cementing our distribution network, and strengthening our brand equity has started to translate into a meaningful volume growth. We reported 16% YOY volume expansion and registered highest ever quarterly volume sales of 51,444 metric tons. The company achieved revenue of INR 740 crores during Q4. Despite the price adjustments, EBITDA margins were at 12.5% YOY as per our guidance, translating to EBITDA of rupees 92 crores. I'm glad to share that the Board of Directors have recommended a final dividend of rupees 1 per equity share. We have already shared several details with you of our acquisition of Aquel brand, which is enabling us to strengthen our bathware platform. Responding with agility, we unveiled the brand Aquel by Prince at the Plumbex India exhibition. The build-out of this segment has also taken good momentum as we achieve the first full quarter of sales and undertake key staff appointments across disciplines in all regions. Let me now share some industry insights which showcase very conducive growth environment. According to ANROC, housing sales created a new peak in the first quarter of 2024 and grew by 14% year-on-year across the top 7 cities. The Indian residential market is experiencing an upsurge in the new residential launches across the top 7 cities. This surge is a direct response to the growing demand for home ownership. As home ownership remains a core aspiration for many Indians, developers are strategically ramping up construction efforts and launching new projects to meet this expanding need. Even the long-term trends seem to be very positive. According to the Confederation of Real Estate Developers Association of India, or CREDAI, the Indian real estate sector is poised to make a substantial impact on the Indian economy. The sector is projected to reach $1.3 trillion, accounting for 13.8% of the projected GDP by FY 2034. Furthermore, by 2047, it is estimated to reach 5.17 trillion, constituting to 17.5% of the projected GDP. Current market size of the Indian real estate stands at $300 billion. In line with our expansion goals, the construction of our Begusarai plant is progressing on course, as this marks Prince Pipes' dynamic expansion in East India, which is a major frontier of growth for us. As informed earlier, the proposed capex in Bihar facility has been raised to around 220 crores and the capacity has been increased to about 48,000 metric tons. The fittings capacity that was originally planned for phase 2 has been preponed. With the establishment of our plant at Bihar, Prince will have a manufacturing presence across the country. The plants of Jaipur, Telangana and Bihar have significant land bank, which will help us swiftly conduct any expansion when required. The water tank segment is progressing well, and we continue to expand our in-house manufacturing footprint. We plan to launch in Chennai in this quarter. Additionally, the proposed capacity for water tanks is estimated at 60 lakhs liters per month at Bihar plant, which will go on stream in Q4 of FY25. We have been building a multi-location manufacturing network of our water tank segment to enable us to leverage the network for greater scaling. Prince is building several levers of growth that will give greater play to our strategies to become a stronger, greater, and more resilient enterprise. With a presence across pipes, water tanks, and bathware, the overall addressable market for Prince would be over 60,000 crores, giving us a significant room for growth. Sustainability continues to be a core focus area. I'm happy to share that the Haridwar plant achieved greenhouse emission certificate done as per ISO 14064-3/2019, including scope 1, 2 and 3 from DQS India, reiterating the company's commitment to ESG goals. As I conclude, I would like to reiterate that at Prince Pipes, we are committed to and pride ourselves on our ability to address the needs of changing times. Our focus remains on meeting the evolving customer demands, building a robust and efficient supply chain, safeguarding the environment, and undertaking strategic initiatives that will give greater play to our basic business model. As we progress, we will continue to focus on a quick response, agility, and implementation to unlock greater value in the business. Thank you for your time and mind share. I will now hand it over to Anand to take you through the key financial highlights.
Thank you, Parag Bhai, and good morning, friends. I'll be taking you through Q4 FY2024 financials now. For Q4, revenue stands at rupees 740 crores. Sales volume reported at 51,444 metric ton. EBITDA margin for Q4 stands at 12.5%. For Q4, EBITDA is at 92 crores compared to 148 crores in Q4 FY2023. PAT stood at rupees 55 crores compared to 94 crores in last Q4. For the full year, revenue stands at 2,569 crores compared to 2,711 crores in FY2023. Sales volume has increased by 10% to 172,793 metric ton for full year, as compared to 157,717 metric ton in FY2023. Profit after tax, including exceptional item, increased by 51% at 183 crores as compared to 121 crores in the previous fiscal. We continue to judicially expand our channel finance program, and we have made steady progress since the recourse has shifted to distributors, and have increased sanction amount from 123 in Q3 of 24 to 150 in Q4 of 24. With 146 distributors currently in our program. In addition to channel finance program, we are further tightening our credit policy for improved cash flow. With this, we'd like to open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for while the question queue assembles. The first question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, good morning, team. Thank you for the opportunity. Congratulations for strong volume performance. If you could elaborate, in terms of what has driven this, in terms of application as well as the polymers.
Yeah, thank you, Achal. So this growth has actually come, of course, we continue to do well in plumbing and SWR. But this kind of a volume performance was possible because of strong volumes across agriculture as well. As you know, Q1 is a season for agri as well. Q4 and Q1 both. So we have seen good growth across our core sector, which is plumbing, but even in agri and infra, which is the double wall corrugated pipes and the HDP pipes. We have seen a contribution across plumbing, agriculture and infrastructure, which is why we are confident that this growth is more sustainable going forward.
Okay. And in terms of the polymer, like any particular, any substantial change in terms of the growth, or it is similar for PVC, CPVC, APPR, etc.?
Yeah, similar across PVC and CPVC, as well as the PPR and of course HDP is more because the base is smaller, but in the core segments of PVC and CPVC, the growth has been across both.
And just to clarify, you're talking about the quarter here, right, and not the full year, right?
Q4.
Q4 only. Okay. The second question, and with respect to, if you look at the receivables for the as of March 24, that's jumped meaningfully, right? Like if I look at September, it was 400 crores, and March it is 500 and almost 85 crores. So if you could help us understand, what has driven this significant increase? Is that a particular region, pocket, channel? Anything, any more color you can give? And the second question related to that is that, is there any change in the credit policy in 4Q or as we speak?
Sure. Achal, in the 3 months of the last quarter, we saw that the traction happened mostly in March. Out of the 3 months, March had seen a good pull from the market, and that has resulted in overdues lying at the year end, which you rightly said is around 580 kind of. While we speak, this number has come to around 460, 470, which we have in last 45 days, we have done good collection from the market, and we see that in coming 2 quarters, it will be fully streamlined. In terms of credit policy, we are working towards it, and in terms of tightening the credit days, in terms of tightening the different aspects of policy, we are working, and we are very confident that this will help us in getting back to where we were in next 3 to 4 months.
Understood. Just to clarify, what is the channel finance number of March 24 and 23 you said?
So channel finance sanction limit, I had mentioned that it is around 150 crores, and last quarter it was 123 crores. So we are making steady progress in that. In terms of utilization, means the sanction limit which the distributors are using right now is close to 100 crores now.
100 crores as of March 24, and how much was that in March 23?
It was around 75.
75 crore in March 23. And you said it is 100% non-recourse right now?
Yes.
Understood. And Just one more question. You said this 16% growth in a remark. It is sustainable. Is that how do we look at the volume growth and margins if you were to give some coming year or medium term?
Coming forward for the 3 years, we see that real estate will continue to do well. So will infrastructure. We also see commodity prices, at least for the next couple of quarters, being extremely range bound and no volatility, which should do well for agriculture as well. I think we are expecting a healthy and healthy monsoon season as well, which will do well for the agri and the per capita incomes on the rural side. So I do believe over the next 2-3 years, 15% volume growth coupled with our regular, sort of EBITDA margin guidance of 12 to 14%, I think is something which is what is attainable.
Got it. And just one last question, if I may. What is the industry growth according to you for, for PVC or for the entire pipe sector for FY24? Any ballpark estimate there?
I think we don't have an estimate offhand. Maybe have to connect once we have clarity on that. I think Carl will share with you.
Sure. Thank you and wish you all the best.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure the management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we will request you to rejoin the queue. Thank you. The next question is from the line of Keshav Lahoti from HDFC Securities. Please go ahead.
Hi. Thank you for the opportunity. So firstly, on the bathware segment, what was the bathware segment sales in Q4 and FY24, employee and ad spend, and finally the PAT for this segment?
So quarter sales for Q4 was around 3 to 4 crores. What was the follow-up question?
Ad spends and the PAT for this segment. Ad and employee spend, what number you used to give earlier?
So for the annum, 4 crores of employee and 4 crores of A&P for bathware.
Okay. Would you like to guide what is the segment PAT?
I don't have a offhand number.
So right now we are not looking at segment PAT. So top line is around 10 crores for this financial year. And as Nihar mentioned, the employee cost is close to 4.5 crores. And ad spend is around 4 crores. And other ancillary expense out of this segment is around 1 crores. This is how the breakup looks like. So we are not releasing any segmental profits right now. Going forward, we will see that as and when we grow in this segment, we will start publishing that as well.
Understood. Got it. In opening commentary, you speak about Bihar phase 2. By phase 2, you mean the additional capacity which you will add after this 48 kmt is preponed?
So the phase 1 is the pipe capacity. Phase the fitting capacity. That's what we are addressing. This is together 48 kts.
Got it. And this 48 will commission by Q4FY25. Understood.
So the commissioning will start happening from Q4FY25. Obviously, the full capacity will not go immediately. It will be done in a phased manner in 3 to 6 months from the go live of production.
And looking at the demand scenario right now and the kind of buoyancy that we are seeing in demand across segments, our full efforts are towards how we can expedite Bihar. So that is going on, and hopefully we can have some expedition of that. So currently we are guiding for Q4, but we are gunning for something quicker than that.
Understood. Got it. Just on the price correction front, the price correction which you were taking on your pipes and fitting side, so that is now done, and what sort of correction you have taken at a broader portfolio level?
So the correction is done. In Q4, we have taken the price correction, and that is reflected in our realizations also correcting. So it has all been accounted for, and as we speak, we are competitive across segments, across geographies.
Got it. Last question, what is the ad spend for the entire year?
Sorry
and
to
for this quarter?
interrupt, Keshav.
Okay, I'll come back in queue. Thank you.
Thank you. The next question is from the line of Shubham Agarwal from Axis Capital. Please go ahead.
Hi, thank you for the opportunity. Just a few, firstly on the working capital, we've already discussed it in a bit. So I recall that, we were using channel financing to reduce the debtors, and this was expected to stabilize around 45 odd levels. You mentioned in an earlier comment that it's expected to normalize in 2 quarters, that is by September. So should we expect it to come back to 50 odd levels by September? That is one. And similarly on the working capital on the creditor side also, we are seeing that there's a decrease in creditors. So is this because of the continued increase in domestic sourcing, and where should we expect it to settle? That's question number 1.
So for debtors, as we have said that in the 3 months of the last quarter, March being on a heavier side, this number has gone up. We are taking proactive steps in terms of strengthening our credit policy, and in next 3 to 6 months, we are confident that we'll be back to our numbers 50 to 55 where we used to hover around.
And just to add to that, something like tightening of credit of debtor days is something that takes time. Because we are, a growing industry, we are constantly expanding our channel as well. So we have always maintained that this is not, reduction is not going to be done overnight. Of course, the normalization, yes, in 1 or 2 quarters we will be able to achieve that. But channel finance is a tool to ensure that we are able to grow without really, increasing the size of the balance sheet. So that's not something that will happen overnight. It will happen over time. We have been able to reduce it in the past with time, which is why we are confident of doing that in the future. And to address the second part of your question, I think in terms of creditor days, yes, it's a function of our procurement, whether it's, the ratio of import to domestic, which, is we don't import looking at credit days. So importing firstly or buying firstly is a function of pricing as well as covering our volumes. So that it really depends quarter to quarter what our strategy is. So creditor days is not something which is really in our control. I think the best and most sustainable way of controlling working capital is through debtor days, and which we are confident will strengthen with time.
Yeah, perfect. So the second, this question was on Aquil. So, you acquired Aquil now. Just wanted to get a sense that, what is the kind of investment you expect to do in this business over the next 2 years? And, what kind of, when I say investment, one, the amount of money you intend to put in, and the amount of loss that the segment is expected to report over the next 2 years.
So, the total asset purchase was of 55 crores, which is in 2 tranches for the brand as well as the state-of-the-art manufacturing facility in Bhuj. I think we will need another 7 to 10 crores of maintenance and debottlenecking capex at Bhuj, and with that we would be able to unlock production capacity of 100 to 120 crores at Bhuj. So that will be the very small incremental capex that we do over the coming quarters. And in terms of the other investment is more from an OPEX point of view, which is manpower cost and branding cost. Of course, post Aquil now we will become more aggressive with A&P in 2 ways. One, of course, now we will become pan-India. Till now, whatever numbers we are doing are only from 2 zones. north and west. By the end of the first half of current financial year, we will be pan-India across northwest, southeast. So one is geographical expansion, and second is now that we have an very lucrative platform like Aquil, we will become more aggressive in ATL, BTL as well as digital. So the branding spends will go up, and we will share that with all of you at the right time.
So this, just with that number you're finalizing it, right? The number, the OPEX expenditure that you intend to do in Aquil.
Correct.
Got it. My last one is just on the capex. If you can break up the capex that you did in FY24, where did you put that, and what is the expected capex for 25 to 26? That's all from me.
So the majority of the capex which you'll see in the schedule of fixed asset, which is around 200 crores, is land at Bihar has been capitalized because we have registered that. So it is around 28 crores. Ruby, which we have regularized, is at 37 crores. Aquil is 12 crores, which has been built into the FA. And apart from that, the ERP which we had done is around 8 crores. So these are broader 100 crores item, and rest 100 crores is into existing plant for debottlenecking and replacement capex.
What's your general maintenance capex?
It's around 60 to 70 crores. That's the range. That's the maintenance, and then comes the replacement.
Got it. Thank you. If I can just slip one more question, what is the inventory loss for the year, or inventory loss gain for the year, and Q4 if any?
Q4 there is no inventory loss. For the year, I think you can see I don't have the number offhand, but every quarter we have shared the gain or loss. But for Q4 there is no inventory gain or loss.
Got it. Thank you. That's all.
Now, just to add to that, maybe I can give some more color. I think the way PVC prices are, I think they are, of course, you will have slight upward or downward movement, but mostly will be range bound, which will make a very growth conducive environment. And I don't think we will see very large inventory gain or loss going forward, which was the normal situation for this industry. So I think that is good for a distribution driven business. When there is low volatility in input prices, we will not see extreme restocking or destocking, and neither will we see extreme inventory gain or loss, which is why we are trying to even prepone our capacity addition for the Begusarai facility.
Got it. Got it. That's all from me. I'll get back in the queue.
Thank you. The next question is from the line of Dhananjay Pagrodia from ASK Investment Managers. Please go ahead.
Hi, congratulations on a good volume growth. Maybe I missed this, but could you shed some color on the working capital and why it's bloated, and how we could maybe going forward work on this?
So I think we've shared earlier, working capital has increased because of the debtor days, because the second half of the demand traction improved in the second half of the quarter, which is why that has increased. As we speak, the receivables have come back to a level of 460 to 470 crores. And as we use channel finance effectively over the next 2 quarters, by the end of the second quarter, we expect receivables to come between 50 to 60 days.
And are we done now with all our ERP implementations and everything? So now, from now on, it'll be normal course of business, right?
Yes, that is already done since before this Q4 as well.
Okay. So I know it's a little tough right now, but any guidance now on how we should look at the company? Because now we've done all the hard work. We've put in the effort in terms of getting everything in streamlined. So how should one look at it for, let's say, FY25 in terms of volume growth? And how are we looking to maybe reduce the pricing differential versus the little larger players?
So I think pricing differential today we are competitive. We have done the price corrections in certain markets where we were over premiumized, which hurt volume growth in the beginning of the year. That is all corrected, and which is why you are seeing the kind of strong volume performance in the March quarter. And we believe this will continue to sustain, especially because the positive demand trends that we are seeing across plumbing, agri, and infra. So that's the demand scenario, and we are confident of 15% volume growth for the next few years.
Next few years. Okay. And bathware is too small right now, right?
Correct. So I think bathware, in the previous questions we've tried to address that now we will be going pan-India, and after the acquisition we will be accelerating our
Perfect. Thank you. Thank you so much.
Thank you. The next question is from the line of Sneha Talreja from Nuvama Wealth Management. Please go ahead.
Good morning, team, and thanks a lot for the opportunity. Couple of questions from my end. While you said that, we have taken price correction measures, where do we stand now versus peers? Any, difference in the pricing that you would like to share?
Yeah, like I said, the price correction has been accounted for, and already we have taken that action in the market, and currently as we speak across PVC and CPVC, we are competitive. So this is after interacting with our channel and taking feedback from the sales team and doing our independent research as well. We feel that today now we are competitive across the product portfolio, which is why you are seeing this kind of a strong volume performance.
So number-wise, you mean to say we would be plus minus 2 to 3%? Any range that you would like to give here?
Yeah, I think we are competitive. So it would be, there will not be a very large gap, is what I'm trying to say.
Understood. Secondly, just wanted to understand, while you alluded that, agri was also good, and currently also Q1 is also packed with agri demand. Is there any election impact that you're seeing, or how has been the Q1 so far for you? And how do you see the year panning out to be? Like, what's your guidance on FY25, both volumes as well as margins?
So elections would typically have more of an impact on infrastructure and those kind of segment, which for us is still not very large. It's less than 4-5% of revenues. I think in terms of demand from private real estate or agri, I don't think election has much of a impact on that. And the second part of your question, I think for long-term volume growth, I think 15% is what we are aiming for as a company. And EBITDA margins, we stick to 12 to 14% as our guidance for the operating margins. So I think we are confident of delivering that. And like I said earlier, we are trying to prepone the capacities in the east, looking at this kind of demand across segments.
You got that. Thanks a lot, team, and all the best.
Thank you.
Thank you. The next question is from the line of Varun Jain from Dolat Capital. Please go ahead.
Hi sir. So my question was on market share. So what was your market share at the beginning of FY24, and what was it at the end of FY24? And secondly, if we look at some other companies' growth guidance, especially the market leader, and we look at your volume guidance, will we be losing some market share in FY25? Do we expect that?
No, we don't expect to lose market share in FY25.
And what was our market share in FY24 and beginning and end?
So see, so quickly we don't get exact numbers in terms of what there's 35% of the market is still unorganized. What I know is we have grown at 10%, and industry growth would be sub that. So still we have increased our market share. Of course, we would have grown at a better pace had we not had the ERP issues in the first half. But the kind of efforts that we're doing in terms of network expansion, in terms of addition of new products within the piping portfolio, and the kind of aggressive spends that we are doing in A&P, and the kind of addition that we are doing in the sales team across retail projects, infrastructure, as well as digitization of the value chain through DMS and SFA, we are confident that we will continue to grow. We will continue to grow aggressively, continue to gain market share, and which is why we are aggressively putting up capacity. If you see, out of our total capacity of more than 3 lakh tons, more than 80,000 tons has been put up in the last 3-4 years, and over the next year we will be putting up around 48,000 tons in Bihar as well. So that tells you our mindset for growth, and we are putting our money where our mouth is in terms of adding that capacity, because we are confident that we will continue to grow aggressively and we will continue to gain market share the way we have done consistently over the past many quarters and years.
Okay, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Udit from Yes Securities. Please go ahead.
Yeah. Hi, sir, and congratulations for the volume growth that you have reported. Sir, firstly, would you like to mention that what was the EBITDA loss for the sanitary ware faucet business for the quarter and full year?
So we have informed that the top line is around 10 crores and the direct cost attributable to this segment is close to 8-9 crores under branding, employee and related cost. So segmental we are not disclosing right now. Going forward, once the segment picks up, we'll start disclosing the segmental number as well.
Okay, sure. And so what will be the capex over and above the maintenance in FY25?
For bathware or for pipes?
For total company level.
So it will be in the range of 80 to 100 crores. It includes both. It doesn't include the new facility at Begusarai. I'm talking about the existing capacity and bathware including. It will be in the range of 80 to 100 crores. Obviously excluding the second tranche of Aqua, what we'll be doing in later part of this year. So it includes maintenance as well as replacement capex both.
Got it. And lastly, sir, are we registered for the Jal Jeevan mission that is going on? And if so, then what will it be as a percentage of total volumes?
Yeah, so there is no one central registration for Jal Jeevan mission. There are state level approvals that you need, and as and when that demand comes from that state, given our size, capacity and vintage in the industry, those approvals we get fairly quickly across states. So that's it's decentralized at the state level, yes, and with many states we are already approved. And we continue programs pick up, we get the approvals at the right time.
Got it. And what will be the contribution of it to our total volume in this year?
It will not be very significant.
Okay. Got it. Thank you so much.
Thank you. The next question is from the line of Akash from UTI Mutual Fund. Please go ahead.
Hello. Am I audible?
Yes, Akash. Please go ahead.
Yeah. So just wanted to check. Actually, debt has gone up. So any thoughts on how we are planning to reduce debt?
So the working capital and term loan has been added, and that has been added for the purpose of the new facility at Begusarai. Working capital has not significantly increased. It has increased a bit. It's a working capital requirement. With the cash we have and the unlocking of debtors what we'll have, we are not. It's not a matter of concern for us right now, both in terms of working capital loan and a term loan.
Sure. And sorry. Sure. Yeah. Thank you.
Thank you.
Thank you. The next question is from the line of Sohil Kaura from ICICI Securities. Please go ahead.
Good morning, sir, and thank you for the opportunity.
So my first question was on the bathware segment. If you could guide for FY25, what sort of revenues you are expecting, and if possible, also on the EBITDA level.
EBITDA currently we will at least, I think it will take 12 to 18 months more for really breaking even from here on. But in terms of top line, like I said, now with the Aquel acquisition, our go-to-market accelerates. Today we are selling whatever 10 crores of sales we've done in the past year has only come from 2 zones. And even in those 2 zones, our distribution network is still being set up. So I think before revenue, I think still the first focus is on setting up distribution across Northwest, and in Southeast we are setting up our sales team across the hierarchy. So that would take the next 2 quarters. So by September end, we would become pan-India. And after that, we would be able to give a strong guidance for pan-India sales contribution. But currently, a lot of work is going on at the ground level in terms of selecting the right distributors, whether they are the pipes distributors or new bathware distributors, and as well as setting up display units across retailers. So all that ground level work is going on aggressively as we speak.
Right. And secondly, I wanted to ask on the profitability front. So QOQ, there's a significant improvement in volumes, about 20-odd%. But in terms of EBIT per kg, I mean, in quarter 3 FY24, there was also some inventory losses, and Q4, like you mentioned, there were none. So QOQ, I'm basically not seeing much improvement in EBITDA per kg. So there's barely just 1% improvement. So could you please explain that?
No, so focus is on volume growth. We have taken some price correction like we had guided for in the December quarter. And we had to be more competitive. In certain markets, we had become over-premiumized relative to competitors. So we did that price correction. And as a result of that, you are able to see this kind of a volume growth. So we have always consistently said that our focus continues to be on having strong volume growth with guidance of 12 to 14% operating margins, which is what we have been able to successfully deliver.
Right. Thank you so much, sir.
Thank you. The next question is from the line of Praveen Sahai from PL Capital. Please go ahead.
Yeah, thank you for taking my question. I have a couple of questions. The first is the clarification on the capex. That's 80 to 100 crore plus of if there is any further on the Aquel. Is that what you said about the 25?
So 8 to 10 crores we will be investing in the Bhuj facility to unlock a production capacity of 100 to 120 crores of faucets from Bhuj. Apart from that, we will be spending 80 to 100 crores of debottlenecking and maintenance CapEx for the pipes and fittings and water tanks.
And is there anything from the Bihar facility?
So we have not included Bihar in this. Bihar has been taken as a separate project where we have already given capex projection of 100 to 120 crores, which we will be completing by Q4FY25. So the numbers what we have spoken is purely on the existing facility what we are having.
Okay, got it, sir. Second clarification on the bathware segment, that the projected or targeted from the Bhuj facility, you are talking about 100 and 120 odd crore. So is there any timeline also can you attach to that?
No, timeline, if we invest this 8 to 10 crores, we will be able to immediately unlock this kind of a production capacity. We will do this capacity over 2 quarters.
Okay. And on the advertisement expenses, can you give the numbers for 24?
It's 54 crores for the full year.
Okay. Last questions are on the growth side. Definitely for a quarter, it's being a very good number. of a 16% of a growth, and also you had given that it's a mix of agri plus infra and plumbing. So way forward, can you give some qualitative color for a 25 from where you are expecting a high number of a growth to come in, whether it's a more still focus on the plumbing segment only or infra, some other verticals you are looking at for bringing the growth?
So I think our core segment continues to be plumbing and SWR, which is, we are continuing to grow in that consistently, and those are our value-added products. But apart from that, the agriculture, which is a seasonal business for the Jan quarter and the June quarter, we are expecting good demand because of not only a healthy monsoon and increasing rural per capita incomes, but also because of stable input cost. And as you know, we are a pass-through industry. So because of the low PVC prices, the finished good also is aggressively priced. And agri is very price sensitive, the agri pipe demand. So we are seeing a good demand from that segment as well. And infrastructure, whether it is the double wall corrugated pipes or the HDP pipes, we are seeing aggressive growth potential in that as well. So whatever capex also that we are doing across segments, and this also, the water tank segment, which today is a small contributor, but we have now slowly started manufacturing at all locations. So first we started from the Silvas plant, then we started at Jaipur, then Hyderabad. Last quarter we started at Haridwar, and now soon we will start at Chennai. And in Bihar as well, we will have water tank manufacturing. So we will be really leveraging our multi-location manufacturing footprint for a product like tanks, which is very freight sensitive. So to come back to your original question, we are seeing, why we are confident of this kind of volume growth sustaining is because we are seeing this kind of strong demand momentum across plumbing, agri, infrastructure, as well as water storage.
Is it possible to give any contribution color on this, like how much agri has contributed for a quarter and a year?
So, on a broad level, plumbing and SWR is around 65%. Agri tends to be around 30%. Infrastructure around 4%, and water storage around 1%. So that's a very broad thumb rule.
Okay. And last, sir, as you mentioned that we did some price correction as well. So with the strong growth in the sector, do you expect to come back with some price hike?
Can you repeat the question?
So earlier answering to the question, you had mentioned that you had did some price correction as well in a quarter. But with the strong growth across the segments, do you expect the price correction to roll back?
No, so see, this price correction is not done for discounting. We had just over-premiumized, which is why our volume growth in the first half of the year was not as good. So with this, we have only become more competitive in the marketplace. So that all has been done. It is already accounted for, and we have taken that action in the market. So our focus continues to be on strong volume growth with delivering 12 to 14% operating margin. I think if we are able to do that, we will be able to unlock a lot of value.
Thank you and all the best, sir.
Thank you.